Hello there, it's Clive Lambert from Futures Techs here, and going to go through a few of the charts with a bit of a theme of Fibonacci and how well that's been working in certain things of late today. And so first chart I'm going to look at is Euro against US dollar, and we've got various, I've put a few letters on this. It's not the Elliott wave or anything like that. I'm just purely pointing out that when we sold off from point A to point B, which was around 140, and this is a weekly chart. It was around 140 in May 2014, all the way down to 103.71 in December 2016. Then we saw a strong rally all the way through to February 2018, February last year, that got very close to the 61.8% Fibonacci level at around 126. Then we sold off again. Then we sold off through the rest of 2018, and we've recently bottomed out around 111, 111.76, 112, around there. That is also a 61.8% retracement, and that's a retracement of point B to point C. Now we can put the Fibonacci lines from point C to point D, and that gives us a 38.2% first retracement at 117.30, around there. But what's interesting is because all of the failures, because the failure at point C and then the bounce at point D were on the 61.8% fibs, there's a real symmetry going on here, and the 38.2% Fibonacci lines of all of those moves are all coming together around 117.30, 117.00, 117.30. So we've got a huge area of resistance there that I have highlighted with that sort of yellow eclipse on the chart. So what does that actually tell us? It tells us that we could go back to 117.36 at 117.00, 117.36, and that would be my favoured skew for now. But it also tells us that if we break 111.76, then we are heading back to 108, maybe even back to 103, back down to those lows at 103.41 that we saw in 2016. So I spent a bit of time on that chart. Let's try and whiz through the rest of the charts I wanted to talk about today. Fibonacci is doing its thing in cable as well. Obviously, cable, sterling against the US dollar, is very much chopping around, responding to news flow at the moment. So how much should we rely on charts? You know, that's one of the big questions, and I'm suggesting to my clients, be a bit careful. You know, this isn't a pure technical play. This is very much about news flow, but we are seeing dips getting bought. And yesterday we saw a dip down to 130 that found buyers, and we've got important supports there at 130.50 and 130.24. So as long as we can hold above those, then I think that's still got some upside potential. But there is some horizontal resistance that's really weighing on this one in a band around the 134 area. So quick look at gold. Again, Fibonacci is doing its thing. 1280 was where we bounced from a couple of weeks ago, and that is the 38.2% retrace of the rally we saw from the middle of August last year through to the early February high there when we got up at the 1350. So that's a big area. Fibonacci is doing its thing in gold as well. And 1280, when we bounced off of there a couple of weeks ago, I said, right, this can go back to 1350. It's not doing it in a straight line, but we haven't gone back to 1280. So I'm still of the belief that the next, the next big level we're going to see in gold is a move back to 1350. And my final chart today, and it's once again talking about Fibonacci, and it's the DAX. It's the and I've got a daily chart here. A couple of things to highlight here. 11,883 is the 61.8% retrace of the sell-off we saw in the second part of last year, and the DAX loves a 61.8% retracement, and we just failed there earlier in the week. 11,840 was the high earlier in the week, and we found some sellers. Not a big surprise, because it basically went up and had a look at that 61.8% retracement. One final thing I'd say about the DAX, that green line on the chart, it's the 200-day moving average, which everyone seems to be looking at in all sorts of markets these days. That's at 11,760, so that's another resistance level that has weighed on the market, on the DAX, and is now, resulting in some weakness being seen. Thank you.